Let us start with a disclaimer. Market returns are never guaranteed, but when we do the analysis and research properly, we get an edge in the market. But risk management cannot be ignored. The S&P 500 and Nasdaq 100 hit yet another record high this week. But here is a big question. Are we witnessing the start of a new bull leg, or are investors getting too comfortable in the risky zone? In today's video, we will break it down. The US and the global market performance, market sentiments, volatility, inflation data, and finally, we will head to the charts for the technical analysis of S&P 500 and Nasdaq 100. All right, let's begin. US and global market recap. First, let us look how market performed this week compared to the last week. The S&P 500 gained 1.59% this week, up sharply from just 0.33% last week. The Nasdaq 100, which is a tech-heavy index, rose 1.86%, again stronger than the last week's of 1.01%. Even the Dow Jones Industrial Average Index turned positive, up 0.95% this week compared to a fall of 0.32% in the last week. So overall, all the three US benchmarks moved higher together, showing a strong momentum in the market. Now let us quickly check the global picture. UK's FTSE 100 rose 0.82%. Germany's DAX added 0.43%. Japan's Nikkei 225 jumped a massive 4.07%. And Hong Kong's Hang Seng rose by 3.82%. India's Nifty 50 also gained 1.51%. Clearly, the global market showed risk appetite this week, led by Asia, Japan, and Hong Kong in particular. Market sentiment, fear and greed. Now let us move to the market sentiment using fear and greed index. Right now, the reading is 54, which is a neutral zone. This means the investors are balanced, neither very fearful nor very much greedy. For the context, just 1 week ago, it was reading 53. A month ago, it was at 62, which was in a greed territory. 1 year back, it was reading 42, which was fear. So compared to last year, investors are much more comfortable this year. But compared to the last month, greed has cooled off a bit. Momentum and options signals. Next is the momentum. The S&P 500 is trading well above its 125-day moving average. This is an important technical measure for the trend and the momentum. And being above, it shows the positive momentum. That is why the indicator here is marked as greed. But when we look at the options market, the story changes. The put-call ratio is just 0.63. Let me simplify for you. A lower ratio means traders are buying more call options, that is a bullish bets, than put options, that is a bearish bets. When everyone is buying calls, it often signals extreme greed, too much optimism. So while the momentum looks healthy, options are flashing at a warning of overconfidence. By the way, if you want to learn technical analysis and trading from the scratch, I have created a complete zero to hero series on my main channel, D K Sinha. It is in simple English, designed for beginners. You will find the playlist link in the description box below. Make sure to check it out.
Let's start with this stock market 101 video.
Good idea. It covers the basics. Yes.
And then maybe the common mistakes one.
Yes. So we avoid those.
Volatility analysis, VIX. Now let's talk about the market volatility. The VIX, that is volatility index, is currently at 14.7. That is quite close to usual lower band of 12 to 13.5. When VIX is low, market feels calm. But too much calm can sometimes mean complacency. On the chart you see on the screen, the long-term weekly pattern shows this zone has acted as a bottom many a times. Another view, the 50-day moving average of VIX also puts it in the neutral range. So volatility is telling us investors are relaxed, maybe a bit too relaxed. Macro updates, inflation and jobs. Now let's cover some important macroeconomic data from this week. First, consumer inflation. The CPI or Consumer Price Index rose 2.9% year on year in the month of August. This was the highest since January, showing that the inflation pressure is not fully gone. Second, labor market. Weekly jobless claims jumped to 263,000, the highest since October 2021. That means more people are filing for unemployment benefits, a sign of cooling in the job market. And the third, wholesale prices. The PPI or Producer Price Index unexpectedly fell 0.1% in the month of August. That's a very big relief for the businesses because input costs are easing. So overall, the macro picture is mixed. Consumer inflation a bit hot, jobs data weaker, but wholesale prices cooling. For the US Federal Reserve, this provides some space to think about an interest rate cut in their meeting next week. But wait, just because inflation is cooling does not mean the market rally will continue forever. The real test comes in the Fed's next meeting, and the charts of S&P 500 and Nasdaq 100 will give us the clear clues. Technical outlook, S&P 500 and Nasdaq 100. Now let us move to the price charts to look at the price action, potential support and resistance levels. This way, you will also learn how the technical analysis is done. This is the price chart of S&P 500 index in weekly time frame. The index made an all-time high of 6,600.21 this week, and this is how it was bullish by 1.59%. Look at the price action. This was the area it was struggling to go past. Multiple price rejection can be seen, and a small body candlestick pattern existed over there. Now it has given a breakout of this important resistance area. Not only that, but it has gone and closed past the high of prior week. Now when we look at the daily price chart, look at this trend line. Price has taken support here. Price has taken once again support, support and support. So there is a multiple touch point. So this trend line is acting as a rising trend line, acting as a support and dynamic support. Now it is almost touching EMA 21. So EMA 21 and this trend line is acting as a dynamic support. Now can you see some kind of loss of upside momentum during the last trading session of this week? However, prior day had a bullish kicker kind of candlestick pattern, but there is no proper follow through. Why this is happening? So can you see it was trading in this range? This was the range which has given a breakout over here. So if we just project by using the Fibonacci expansion tool, this particular range, then we get the answer for it. Price is struggling because it has reached and attained 61.8% expansion level, and hence it is struggling. So there might be minor pullback, but overall structure is bullish, and hence this area where the price is struggled over here, 6,482, 6,500 is the intermittent support, because there is an intervention of EMA 21 also here and a trend line, rising trend line. But post minor correction, when the trend resumes, the potential next level would be 100% expansion level, which arrives at around 6,643. This is the weekly price chart of Nasdaq 100 index. Now this index made a high of 24,137.06 and finally closed at 24,092.19. Now we had already discussed in earlier videos, this is the area of potential resistance from where the price is facing some kind of rejection. Now the price is reaching towards this particular trend line, a rising trend line, which is acting as a dynamic resistance. Now earlier we calculated the prior impulse and a breakout over here, which means a breakout of a bullish flag. Accordingly, the next potential level using the Fibonacci expansion tool of 100% comes at 24,775. The first level which we discussed in the last week was 23,950. That has already been attained. So we cannot rule out the possibility of some kind of rejection in the price from this particular trend line because it is quite in proximity of 61.8% expansion level as well. Now, when we look at the daily price chart, what we can see since past 3-4 days, there is a formation of a small body candlestick pattern which itself indicates the loss of upside momentum, and the price is reaching towards this resistance area. Another important point is, if at all the pullback takes place, where is the support? The first immediate support is this area of rejection, which is 23,950. But the true support is, can you see here some kind of failed breakout, and then next day there was a formation of a one black crow candlestick pattern. So 23,600 in my opinion is the immediate intermittent support area which coincides with not only this failed breakout point but also with EMA 21 and volume weighted moving average 21 period. Conclusion: the S&P 500 and Nasdaq 100 hit new record highs this week. Market sentiment is neutral overall, but options show sign of extreme greed. Volatility is low, inflation is mixed, jobs data weak, and wholesale prices cooled off, giving the Fed room to cut rates. Technically, the trend remains bullish, but we must respect support and resistance levels. Remember, markets always move in probabilities, not certainties. And I always say, trend is your friend until it bends. If you found this analysis valuable, don't forget to like, share, and subscribe. Learning never stops with D K Sinha.